The China threat, folks, this is the big question. Is it really destroying the AI trade? For me, I trace all of this back to late June. Remember when Apple started whining about memory costs and then they suggested out loud that they would love to be able to use those chips from China? CMH, the semiconductor index, it closed at 655, the high. That was a high on June 30th. And since then, as you can see, it's been timber. Then came that Kimi K3 shocker. Of course, that scared everyone. And of course, since then, everyone from Jensen to Elon jumping on the open source bandwagon. Well, guess what? The valuations of OpenAI and Anthropic, they are now beginning to take major, major hits. U.S. frontier model companies, listen, they have billions of dollars in contracts that they owe. They fund these compute stuff. So put the dominoes together, folks. This is Anthropic, which was unstoppable. Meanwhile, China AI exports are absolutely through the roof. So the big question now is, to what degree is this killing the AI rally? Or in some odd way, does it actually enhance the value proposition? I'm going to bring in now Barbara Doran, BD8 Capital Partners, the founder and CEO. So, you know, it's really, there's a lot of anxiety out there. There was always a lot of anxiety about the return on investment, but the conversation has changed because this seems to be the wild card now.
Yeah, and I know I liked what you said in the end is, or does this validate things?
Right.
You know, and I think that's really the key question because people are freaking out about a lot of things. Return on investment, we're not seeing the monetization. China's coming in, pricing will go down, but the fact is demand is overwhelmingly strong and looks like it's just continuing to increase. You know, particularly when you look at autonomous vehicles and robots and everything else, that's going to continue. And if you look, when you start to drill down into the China issue, I mean, you look at, say, the memory stock that just went public, they're doing DRAMs. That's a commodity. That is not where the AI chip demand is.
And yet, Hynix came in a little less than expected because they're doing HBMs, which, you know, it's a smaller market, but that's where it's going, to your point. So the street can't grapple with things. A few months ago, you and I kind of talked about ASML. Are they under threat, right? Not long ago, they were 10 to 15 years away. Now they're debuting something very similar to Chinese. So the question is, does the West, particularly America, still have that technology edge?
I think right now we do. You know, that seems to be clear. But it does seem that China is catching up. But you're still going to have very big differences in whether you're looking at manufacturing like Taiwan Semi, which maybe we'll talk about later, which really has state-of-the-art manufacturing, the highest end that you can't replicate very quickly or easily. So you really have to break it down. But I think given our culture and the innovation, doesn't matter, China has their centralization of money, we have the innovation drive.
Okay. So the fate now, hyperscalers. You can see now they're all getting absolutely hammered. Apple, of course, is standing out in the crowd. It was getting hammered before, it wasn't making investments. Now everyone's saying maybe they were smart not to make these investments. What's the fate of these companies?
Well, I think right now there's a lot of buying opportunities. When you look at the growth rate, we're not talking about just the next 6, 12, 18 months. Like a Micron. You know, the supply constraints are there at least through 27, and now it's sounding like even through 28. And the same with NVIDIA. I mean, everybody's concerned about their funding, their customers, but this is what you do when you need to meet demand.
There's a chart out there with their CDS payments through the roof, but it really is only 6% chance of default, to your point. And the free cash flows, if you're patient, between now and 2030 will go to places they've never been before. You brought up Micron. I'm going to bring up here a little schematic because I talked about CXMT. Right now, about 7% of the global market. Micron, you think, is in the sweet spot, though, right now?
Yeah, I do. And I do. And it's really because of the supply issue. In the past, I mean, this really was a commodity company where you'd have quarter-to-quarter contracts. If that, the PE would be 6 to 8. Right now, the PE is below 6, and they have sustainable growth for at least the next 2 years. So I think it deserves a higher PE.
The PE is low because historically it's been one of these industries where they've had no pricing power. And every now and then they'll get it, but they'll have it for a brief moment in time. You think, so your suggestion is a new paradigm, that they've gotten to a level and that the market's got to catch up to that. They're not going to lose this pricing power.
Not for a while to come. I mean, it was really DRAM commodity, which is still a commodity, but you can really look at them more as an AI infrastructure play because everything they're doing is feeding in to all the AI demand, whether it's data centers, robots, et cetera.
You mentioned Taiwan Semi again, just unstoppable, beautiful chart, starting to break down a little bit. It's been below the 50-day before, but it's usually bounced back sooner than this. In free fall. Unnecessary buying opportunity?
I think it's a buying opportunity. Nothing's changed for them. You know, and people say, well, China, geopolitical, et cetera, but I think it's really down with the whole group and semis and what's happening there, so I think there's a buying opportunity.
You also like Eli Lilly, and I think that speaks for itself. For now, they've won the GLP war with Novartis.
And all the applications that will come from that. This is a huge pipeline.
Absolutely phenomenal. Real quick, I want to ask you about these earnings after the bell. Microsoft, Meta. There are a couple of keys you say to look for. For Microsoft, you say Azure growth. That's what it's all about. And for Meta, ad revenue. What exactly do you want to see?
Well, on Microsoft with the Azure, that's obviously key. They came in at 40 plus percent, and this time it's expected to be the same. But it's also you want to see what they're saying about CapEx because they've been sort of very cautious and careful about it. So suddenly they explode or they pull back. It could be an interesting signal. So we'll see what they say there because it's really about the sustainability of a cloud business. Yeah, and Meta. Question right now is not just, it's clear they've monetized all their AI investment to really up their engagement, their advertising, responsiveness, and revenue, but now it's they're spending even more. And so people want to hear them articulate, what is the end game there? Where do we see that playing out?
15 seconds. The catch-22 coming into earnings season, they said if these hyperscalers pull back on their spending, the whole rally dies. Google didn't pull back, and the rally is dying. What do you want to see? Do you want to see steady? We're going to keep throwing money at this, or you want to see a pullback?
Well, in the short run, I mean, investors, if you pull back, you're saying, okay, then we're wrong. There's not the opportunity. I think they're spending as they need to. I mean, let's remember Amazon. Amazon, for the time they went public, for 6 more years, made no money because they were reinvesting it. And I owned the stock then, and you had to live through incredible drawdowns.
Bezos set the standard. He took a lot of heat. He pushed back on Wall Street, and anyone who held tight with him made a fortune.
You got it.
Great stuff, Barbara. Appreciate it.